pretty much all of the Asian markets which are trading with some cuts.
योग से हम अपने स्वास्थ्य को भी बेहतर बनाएंगे.
18660, which I think is still important. The 20-day also has come up a little bit. That stands at about 18610.
Competition Commission of India, CCI, has approved HDFC Limited to acquire additional shareholding in HDFC Life.
The Nifty, the first tick is in the green, so up about 20-odd points.
For the near term, the market could take a bit of a breather.
While Hero with 80% share over there would like to expand their core, as they call it, we are going to do everything to shrink that core.
That inventory now sort of is stabilizing, and the Q1 is that stabilizing factor.
Look at the market on Nifty, it's barely up 3-4 points.
He has finally received the US FDA approval for the generic version of the Spiriva drug, which is used to treat asthma.
There is an official communication as well that yes, Shriram Enterprises has sold its entire 8.3% stake in Shriram Finance.
Mergers and acquisitions and consolidation likely to pick up in the consumer electricals business.
Sony has no plans to back out of the merger despite the allegations of fund diversion.
Keep some distance between yourself and the chair, and slowly as you exhale, start to bend forward.
We are 21 points from the day's high after that big fall.
Well, that's the day so far. You're with us here on another new edition of Closing Bell, the last hour of trade coming up this Wednesday afternoon. We're coming to you live from the CNBC-TV18 News Online studios. I'm Prashant. With me, my colleague Surabhi here in the studios, and Mangalam is joining in from the newsroom floor. Guys, hi, good afternoon.
Good afternoon. Before you guys talk markets, Prashant, I have a question for both of you. Have either of you done your desk or table yoga stretches?
I saw Mangalam do it.
That wasn't me doing yoga stretches. That was me reaching out for the food which was under my table.
So stretched nonetheless. So good going.
By the way, resolution for the next 1 hour. In 1 hour, we will not mention new high till it actually happens.
No.
Right?
All right. You just broke the resolution by saying we won't mention
say it
what.
once, right, Mangalam?
No countdown, no timer, nothing of that sort. Nothing of that sort.
All right, no, absolutely. It's in many ways it is a repeat of what we saw yesterday. Today's session, that is. And the reason I say that is because look at the structure. Yesterday, the Nifty started, sold off. I mean, the sell-off yesterday was a bit more dramatic. But the low yesterday was made at 10:30. Today, the low is made at 11 o'clock. And from there, it was a slow, steady kind of march upwards all the way till 3 p.m. yesterday. And then between 3 and 3:30, all the action happened. Will we see a repeat of that today? We don't know. Let's find out. But for now, it's quiet. I mean, 25 points, neither here nor there is what we have. Now, Bank Nifty is underperforming a little bit. I mean, compared to the Nifty, if it is, the Nifty's not got very much on it, but the Bank Nifty's got even less. Small cap index is off the highs. I mean, the index has actually given up quite a bit of gains from the day's high. So it's barely in the green. The mid cap index is doing much better. We'll talk about 2 or 3 stocks which are powering that rally there. The index is up almost about 0.65%. Actually, even there, when I looked at it about 10 minutes back, you had about 0.9% gains. That's moderated to being up about just 0.65 or so. So that's the market picture right now. Not very much going on. It's quiet. Broader markets in terms of single stocks, etc. That's where the action has been. Surabhi.
Well, Prashant, I'm just looking at the push and pull factors. The market's very, very evenly poised right now. And on the downside, just in terms of trends and sectors, auto is seeing a huge amount of profit taking today, whether you're looking at 4-wheelers or 2-wheelers. So that's the one clear sort of red bar on the screen. Maruti, Tata Motors, M&M, Bajaj Auto, you name it. I mean, that's been the one of the weakest performing sectors of the day. Metals are down. That story hasn't changed from the morning either. So JSW, Hindalco, those are stocks on the downside. And then the problem for the bulls always has been the banks. That's not really resolving. Let's pull up the Bank Nifty for you and some of the constituents. Maybe the constituents of the Bank Nifty will get that up as well. Because you've got the likes of an ICICI Bank, some of the others, Axis, kind of struggling here and there. Not much leadership, one can say for sure, barring HDFC Bank. You can see in terms of the private sector tally, HDFC Bank single-handedly is keeping the Bank Nifty positive. Otherwise, it's not a great day for large cap banks. Life insurers, I mean, there's no stopping. So that part of the market is still rallying further. HDFC Life continues to make fresh highs. And interestingly, this is another day, I think this is third day running, we're seeing incremental buying in IT. It's not a huge tsunami or a big wave, but there is some buying. Again, Wipro, TCS, these are some of the stocks on the upside of the screen. But it's just completely offsetting each other. So the net result is a slightly flattish screen on the Nifty with a mild positive bias. But hey, who cares about the Nifty, right? Mid-cap smuggler, that's what it has been all about last few weeks.
That's where the party has been, actually. You know, the last 7 days or so, it's hit record highs on a daily basis, and that continues, though mildly off the highs as we speak. But if you just take a look at the Nifty itself, it's so close yet so far, right? Over the last, on 3 accounts at least, over the last few days, I've just looked at the Nifty days high, and it's contained itself between 18,850 and just below the word that Prashant said we should not be using. 18,865 was on June 16, 18,881 just 7 points away on June 19, and June 21st was 18,876, which is today itself. Nifty Bank, however, has continued to face resistance at the 20-day moving average. Today's high on the Nifty Bank was 43,947. The 20-day moving average, 43,945. Tomorrow is the weekly options expiry. All those who are writing options are positioning themselves for a bit of a range-bound move to happen tomorrow as well, unless we break out of this range and open with a strong gap up itself. So 18,800 put writers extremely active, 18,800 call writers extremely active. Both of them together are writing that straddle for a premium of 100 odd rupees, telling you they're playing for a range of 18,700 at the lower level and 18,900 on the way up. Just watching out for a couple of stocks in the broader markets. Lupin, a non-Nifty large cap. Vivek spoke about that story. You know, large amount of long positions being added out there. And India Cement is the other stock from the F&O space, which I'm tracking, because it's moving well, and the open interest on that one has come down. That's telling you that it may get out of F&O ban today. So it's moved closer to the high point of trade. So if it does get out of F&O ban, we may see some further up moves coming by on India Cements. All right, that's about the markets, but let's tell you what we have lined up on the show for you. We'll put the spotlight on a whole host of stocks. Lupin is the one that we just spoke about. We'll, get a little more about it as it emerges as the first generic player to get a nod to sell the billion-dollar respiratory drug Spiriva in the US. Generic Spiriva, that is.
Piramal Enterprises divests its entire 8.3% stake in Shriram Finance in a block trade today, actually a bunch of block trades today. The stocks have not stopped flying ever since. We'll tell you why in just a bit.
And then we speak about the oil and gas space. IGL surges as the Delhi government has extended the permit validity of taxis using CNG and other clean fuel to 15 years.
Finally, we discuss markets and more stock-specific action with our alpha manager of the day, Aman Chauhan of Abacus Asset Management, joins in with some ideas. That and more over the next 60 minutes.
Okay, well, Mitesh is with us now to run us through what he's making of the day so far. Sideways for the Nifty, but I reckon there are stocks one can trade which you'd want you to trade. Mitesh, hi, afternoon. What do you make of things so far, and what are your trades?
Afternoon, Prashant. I think that's been the stance which I have taken for last 3-4 sessions, that avoid trading the index, despite the fact that the Nifty managed to make a new high in the last couple of days. But we saw that the new highs did not or were not followed by a strong momentum or a strong burst of upward movement. Rather, it's been a subdued kind of movement, and purely because of the Bank Nifty, which is still not participating significantly on the upside. So I think till that thing happens, till the indicators kind of cool off on the hourly and the 2-hourly charts, I think trading the index may not be very useful. But as you rightly said, it's the stock which should be the focus area. I have 2 buy calls right now. A buy on India Cement, which I would recommend buying with a stop at about levels of 223 and a target of 240 on the upside. And the second one is a buy on Aarti Industries. I want to give a disclaimer. I have personally this stock in my trading portfolio, so I have vested interest over here. But Aarti is something which I would recommend buying with a stop below levels of 522 and a target of 555 on the upside can be looked at.
All right, fair point, Mitesh. Thanks a lot for that. While other cement stocks are doing well, one of them which is actually at the low point of trade is Shree Cement, and that's on account of news that flash at the bottom of your screen. We learned from our sources that the IT department is conducting survey action at least 5 of their locations in Rajasthan. Timsi joins us on the phone line with the details of this. Timsi, Shree Cement, there is an IT survey out there?
Yes. As you rightly mentioned, sources have indicated that there's survey action that is underway today itself at 5 different locations of Shree Cement in Rajasthan. This is under Section 80IA. And as we speak, the survey action is underway. Obviously, we'll have to wait and watch what is the final outcome and what exactly it is that the IT department is trying to question or establish by conducting these surveys. Back to you.
Okay, got that, Timsy. We'll watch out for the developments there. Thanks for getting us the latest. Speaking of stocks in focus, let's talk about Lupin. That was, of course, the story that you first heard here earlier in the day on CNBC-TV18. And then finally, we have a confirmation now coming through as well. Lupin has got a US FDA approval for generic Spiriva. Ekta is joining in to tell us why this was so important for the company and perhaps why the stock is quite excited about this approval as well. Ekta.
Thanks for that. Well, this is a story that a lot of the analysts, the entire analyst community has been tracking since FY22. Remember that Lupin had received queries from the US drug regulator in August of 2022 or thereabout. And since then, there has been this approval delay which has taken place for Spiriva generic. It is an inhaler drug. It is a $1 billion market size in terms of the US, and it is limited competition for Lupin. Now, finally, they have received approval, but there was an indication that they were probably going to go through with this approval because they were very confident in their Q4 conference call as well as what they had indicated to investors. They had said that they had answered the queries, and by June, July, they should get an indication from the US drug regulator for an approval without an inspection, by August with an inspection. So that means that, and they had also received approval from the Canadian market at the end of May. So now they have received approval for one type of the drug which is sold in the US, which is basically the handheld device. The total market size of this drug is $1 billion. But for the handheld device, it's around $600 to $700 million. So now assuming anywhere between 35 to 50% price erosion in the market and limited competition. I say limited competition because there will be the innovator of the drug, there will be the authorized generic, which is basically launched by the innovator, and Lupin, which is likely to sell in the market. And it is expected to be limited competition for the next 3 years. So that's where the key positive comes in. They are probably going to make around $35 to $50 million in the first year, which is in FY24. They're probably expected to launch in Q2, which is probably in the next month and a half is when you could see the launch for Spiriva generic taking place. Now that is expected to scale up. $35 to $50 million is expected to probably scale up to around $80 to $100 million by next year. So the peak sales are expected to be around $100 million. They could see an addition of around 3 to 4 rupees in FY24 from this drug, and that could probably scale up to around 5 to 6 rupees in terms of an EPS addition. What it does to the US generic business is that the quarterly sales for the US generics could scale up to around $200 million with Spiriva generic, and also they could probably make around $850 million from the US generic business versus over $630 million that they did in FY23. How much of this is factored in? Probably a whole lot, considering that it's already run up around 45% in terms of a stock performance since from its 52-week low. And not to mention that it's already trading at hefty valuations of around 20 times 1 year forward, which is very close to its historical valuations.
Okay, Ekta, thanks very much. That's a very comprehensive roundup, 360-degree roundup on Lupin. The news today, why it's a huge trigger, and then the bigger question, how much is already in the price. Let's pull up a one-year chart on Lupin. As Ekta was saying, there's been a tremendous rally. We'll have that up for you as well, just to keep things in context. Prakash Diwan is with us on the show today. Prakash, good afternoon. Always good to have you on. So Lupin, I'm just putting out the question straight up. As Ekta explained, it's a big deal for the company. These are big revenue numbers that we're talking about. But can it do more from here in terms of the stock price action?
Good afternoon, Surabhi. Happy to be on your show. So I think, as Ekta explained, this does make a big difference, and this was, this was awaited since quite some time. So it is actually the difficulties and challenges in the U.S. market that did Lupin in, and now it's actually the U.S. market opportunity which is bringing it out of the situation. And yes, there is much more to the expectation of the stock beyond this, for the simple reason that it's a completely under-owned stock, and if this is some indication, they'll probably utilize this strength to kind of get their foothold in the US market back in strength. And this as an underlying trend, if you see from all the larger players, be it Sun Pharma, be it Lupin, be it Reddy's, be it even Cipla, though it's not so dominant on the US market. I mean, it has the rest of the world also to kind of get things going for themselves. But these companies have figured out that if you had to be in the generic space, there's too much competition. There's not much of pricing power you get if you were to do it in the conventional generic pipeline. So either you focus on a couple of these blockbusters or move to the specialty portfolio. So that migration is something which will definitely help them. It's a subtle move, but it's happened in the last couple of years, given the challenges all of them have faced in the US markets. And I think this is the beginning of a trend where probably some of these stocks will start getting re-rated. It's nothing going to happen overnight, that's for sure. But my sense is Lupin will probably get out of the woods and it'll probably see an impact like this. Similar move for other companies as well. Of course, they don't have a similar trigger, but I'm saying generally the overall expectation from the pharma pack is changing very rapidly and favorably.
All right, Prakash, thanks a lot for that. In fact, that was one story that you heard here first, and it got confirmed. But let's move on to another one where CNBC-TV18 News break got confirmed, and that was Nimesh's, chatter on D Street. Piramal Enterprises has gone ahead and sold its entire stake in Shriram Finance. Nimesh, we spoke about your strike rate. This is another one. Tell us about the deal and the triggers for both of them.
Okay, so first quickly on the deal. Today, Piramal Enterprise sold its entire 8.3% stake. So it's a clean out trade in Shriram Finance. With this stake sale, they've managed to raise close to 4,800 crores.
Okay.
Now, the significance first for Piramal Enterprises, why it's important. It's important because the current market cap of Piramal Enterprise is close to 22,000 crores. On that, today with this stake sale, they've raised close to 4,800 crores. So 1/4 of market cap they've raised by selling this stake. Now, all eyes will be on how they use the proceeds of this. I spoke to some analysts as well. Street is expecting some bit of debt repayment. There could be a potential dividend or a buyback as well. So that's something we need to see how they spend this entire money. And also from a valuation point of view, if you look at Piramal Enterprises versus the other peers in the NBFC space, Piramal Enterprise currently is selling at 0.7 times price to book on FY24. Something like a Chola is selling at 5 times price to book. Of course, they are not comparable, but there is a wide gap in that from a valuation point of view. Hence, we're seeing a big reaction in Piramal Enterprises in today's trade. The fact is, for an NBFC, capital is a big trigger, and now that they've got this 4,800 crores, there are multiple ways to use this, and hence a big reaction on Piramal Enterprises. Coming to Shriram Finance now. I mean, for Shriram Finance, the biggest takeaway is that the big overhang of supply seems to be out of the way now. Right. In last 2 weeks, more than 10% equity has got changed hands. So last week we saw TPG selling 2.65%. So that was a clean out trade. And today we've got Piramal selling out its entire 8.3%. So again, a clean out trade. And the fact is, even in today's trade, the sense is some of the large long-only funds were buyer. In fact, one of the sovereign funds could be one of the potential anchor investors in today's block. So that's excited the street as well. Even if you look at management commentary, they just came and spoke to us a week, 10 days back, and they're very confident about FY24 in terms of 10% growth, overall growth, 10% growth in the CV segment, more than 10 to 15% growth in the farm equipment segment. So the momentum seems to be there for Shriram as far as earnings are concerned. Now that the clean out trade has happened, the supply is out of the way, and hence you're seeing very sharp reactions.
Right. And Nimesh, it's crazy, right? There used to be anticipation of a block, and people used to run thinking the price will fall. Now it is the opposite. Blocks absolutely are coming, and you don't know whether it'll be 5% or 10%. Just a quick question, Nimesh. Do we know, because Ajay Piramal is known as a savvy investor, a very savvy allocator of capital as well, right?
Yeah,
I mean, through his since he sold the business to Abbott. Do we know what is the sort of net, what is the profit they're netting? I mean, on this sale, after this sale? Because I think they got it in 2017-18.
I'll get you a bit of a background, Prashant. So they first entered into Shriram Group in 2013 with a 10% stake in Shriram Transport Finance. Then in 2014, they bought 20% stake in Shriram Capital, which was the unlisted entity of that group. And in 2018, they bought 10% in Shriram City Union. Now what we are seeing, Shriram Finance is a merger between Shriram Transport and Shriram City Union. So difficult to exactly pencil in how much they've made money in this deal. But the fact that they've been sitting on this for the last 10 years and knowing that Ajay Piramal is known for making bold bets and making large money out of their investments. I'm sure they've made a decent amount of money by selling the stake in Shriram Finance now, in the merged entity.
If just price movement is something to go by, in the last 10 years, the price has moved by nearly 3 times. It was about 500 rupees in 2013, and now it's around 1700 odd rupees. So just by virtue of simple price movement, it's 3 times. I'm sure there's a lot more to it.
But there's a lot more to it. Also the fact that now it's a merged entity, Shriram
Yes,
Transport and Shriram all got merged. So difficult to exactly pinpoint, but I'm sure they would have made more than 5x money for sure. That's my guess, Prashant, looking at just the way stock prices have moved in the last 1 decade in the Shriram Group.
All right, so that's about Ajay Piramal and him making money in Shriram Group. Prakash, the question is, how do retailers make money now here? I mean, both these stocks are buzzing. Nimesh has spoken about one company getting nearly 25% of its market cap as cash right now. There is a chance of them deploying this into business growth, repaying their debt, and perhaps some sort of buyback and money coming to shareholders as well. And the other one has strong growth plans going forward, and there has been a clean out trade, perhaps a strong investor entering as well. How should retailers look at both these counters, and would you buy any of these?
So, I would prefer looking at Shriram Finance for sure, but not at these levels. I mean, this is an exuberance, exuberant level in the sense that the clean out trade is taken on the overhang of any supply, which could have been very painful if it had to come to markets at different levels. Here you have somebody switching in, and somebody switching out negotiated price, which has not been at a discount to market, which also tells you that the demand has been so strong. So essentially, what it does is that now it paves the way for Shriram Finance to get rated as per its operational efficiency and metrics. But whether this price is good enough, I mean, if you compare it with the likes of Chola and all, which are kind of similar in terms of size and positioning, you'll probably find it a bit expensive at this level. It's all thanks to this move, the sharp move that we see, and it will get calibrated. So these are stocks where retail investors don't have to pay a top dollar to buy unless you're buying in huge quantity, and which they don't. So on an individual level, I will definitely get a chance to buy into it at lower levels, and that's the strategy. Piramal is something which probably needs this fund, this entire corpus to kind of repair some of the balance sheet issues that they've had, and then probably announce what they're going to do with the money to make it much more promising. So I would wait for that. But Shriram definitely at lower levels, it makes sense. As you rightly said, Nimesh also pointed out, the management is very clear in terms of the growth ahead. So no doubts about that. But at a reasonable price.
All right, got that. Well, that is the take on the deal of the day, so to speak, Piramal Enterprises and that big block that we saw in Shriram Finance. Thank you for that, Prakash. We do have to take a break. On that note, we'll come back on the other side and kickstart our conversation with the alpha manager of the day. We have Aman Chauhan of Abacus Asset Management joining in.
Welcome back. I mean, I have to say that the market, the Nifty is not doing very much. The broader market also, is not turned south, but there are more declines as compared to advances. So just numerically speaking, 1,200 stocks are lower and about 1,100 stocks are higher. The gap was 2:1 in favor of advances. Look at that. Look at that, how that has panned out. So now it's kind of crossed over. But even with that, I mean, I would, and we'll get to stocks in a bit, the number of stocks on the upside with volumes would far outnumber stocks with volumes on the downside. That has been a feature that we've pointed out constantly, although there are a few, more than a few on the downside with volumes as well. As I said, we'll turn the gaze on stocks in a bit from now. But Aman Chauhan is joining us, fund manager at Abacus Asset Management. Aman, good to have you with us here. Thank you very much for your time. You know, the rally has been just eye-popping, to say the least, mid-caps and small-caps over the last one and a half, 2 months or so now. Aman, what's the broad approach before we get to what you like and what you're buying and selling? Should one start to look at booking profits where you're making, very healthy money? And what's the broad approach to the market now that retail investors should follow?
Yeah, it's been a massive rally, 2.5 months now. 31st March was the day when we saw the lows, and post that, right from the first week of April, the mid and small caps have been in an up move. And it's also joined with the global moves, like global markets have also recovered, and that has also helped. And we have seen massive liquidity coming into India. The FIs were net sellers have turned buyers, and we are also seeing the kind of flows that we are seeing in both domestically as well as FIs. And that has all contributed to this rally. We can't paint a single brush to all the company, whether it's time to book profits or no, but definitely in small caps and micro caps, this is the time when you see liquidity. This is the time when you see volume. So if somebody or some of your holdings is at a valuation where you're not comfortable with or you made decent money, it definitely makes sense to take some money out, because you will not find this liquidity again if the market has to turn. If the market continues, fine, the party continues. But if the market has to turn for some reason, then this kind of liquidity won't be there again.
Okay, got that. Aman, hi, good afternoon. So I was looking at some of your portfolios, and what I figured looking at the large cap PMS, the all cap I think you call it, is that you've really doubled down on financials. And while of course the banks are there and one totally understands that, I think you've got, if I'm not mistaken, ICICI Bank, there's SBI, there's even Axis. You also have interesting non-banks in the portfolio, like I think IIFL Finance, Aditya Birla Capital. So my question to you is more on the non-banks. What's the thought process? What's the rationale? And how are you going about picking in the financial universe beyond the banks?
So beyond the banks, we are sticking to the large names, the quality names, which are a decent franchise, and clearly they're going to be the beneficiaries when the interest rate turns, and which is a consensus view now. And we also share the same view that we are, if not almost at near peak of as far as the interest rate cycle is concerned. So over the next 6 to 12 months, we are definitely seeing a rate cut both globally as well as in India, and that is a meaningful trigger for the non-banking companies. So that's one of the big rationales for us to have a preference at NBFC versus the banks if one has to take a 12-month view.
Right.
But within that, NBFC, we are sticking to the leaders. We are sticking to companies which are leaders or among the top 2-3 players in the segment that they operate into, not going to very small NBFCs.
All right, not going to very small NBFCs. Speaking of financials itself, I do see your portfolio and you do have decent exposure to the IIFL group through either IIFL Finance or IIFL Securities. Now, of the developments that recently happened with the SEBI barring them to solicit new clients for the next 2 years, of course, law will take its course and the company, of course, will go ahead with the way it has to. What are your thoughts on investment in IIFL Securities and IIFL Finance?
Sorry, I can't discuss on very stock-specific names, so I'll just stick myself to saying that we are positive on the NBFC space. The companies that we have in the portfolio, these are all leaders or among the top 3 players in the respective segment that they operate into with very healthy growth, profitability, as well as the valuation. So they all trade at valuations which will be below the mean valuations for the sector, and that's where our positiveness and excitement stands. So, sorry, I won't be able to comment specifically on the stocks that you mentioned.
There are some interesting sort of flashes coming at the bottom of the screen. This is with regards to air conditioning companies, basically consumer durables, but largely ACs, and doesn't look good for in the April to June quarter as well, which is Q1. Stocks reflect that. I mean, names like Voltas, etc. Any thought? We'll have Shilpa join us in a bit to talk more about this. But any thoughts on this space, consumer durables? Stocks are it's actually one space where stocks have not done well, although one can still look at and complain about valuations, which are still high. Your thoughts, Aman?
What I understand from the ground level is that this season also has not been great for the AC as well as the cooling companies, both in India as well as also for the export market. So because of this and being a seasonal nature, bulk of the profits come during the summer season. And if the summer season doesn't go well, then your full year profits are equally impacted. And hence, we don't own any of these names in our portfolio, nor intend to look at them at least in the near term, because now the whole call will shift towards how the next season pans out. So we have good another 6-9 months to decide on how the next season is. At least the current season, there is no trigger for me to look at them.
Okay, so not too interested in consumer durables, I guess. Aman, beyond sectors, I just want to digress a little bit into the broader trend that we're picking up. And, we've been discussing this with Nimesh on the show as well. This huge surge in block trades. And very interesting transactions are happening, right? You have some of the foreign private equity investors / quasi-promoters selling out. Sometimes you have, Indian promoters kind of pairing stake as well. A lot of the mutual funds have been very active buying. And since you're in the market, tell us what you are picking up and how should one read this hectic buy-sell activity. A lot of the entities that are selling actually are insiders. I mean, either they are promoters or very large private equity investors. So should this be seen as a red flag? Or is it just a sign of a deep, mature market?
Both. Let's discuss the positives first. Most of the bulk deals that we see, the buyers are long-only sovereign funds or long-only large funds who have been past investors into India, and they've been investing in India since long. So they understand the Indian markets well. So very few deals we see where there are short-term hedges or say traders which are coming into this block deal. So it's a very good sign that we see serious money coming into these blocks, and we take it pretty positively. At the same time, there is enough liquidity in the market that earlier, if there used to be a block, people used to ask for a discount. Now the situation is different. The seller sometimes even asks for a premium, and the buyer is ready to pay that premium because he's getting the liquidity, which in the current market, he might not get at a certain price. So that is also a very positive sign that we have good liquidity, we have good buying interest in Indian stocks. And this is something which one has to take very positively. In some cases, it can be a case that the insiders are selling or the PE guys are selling who have been on the boards of this company, who have been invested for the past 7, 8, 10 years, and they are choosing to decide. But that is very few names that I see where the PE is completely exiting. In most of the cases, what we see is that they are pairing a bit of their holdings that they have. And I think it's more to do with profit booking because markets have moved up, and it makes sense for any investor to take some profits off the table, right? So this is what we see. So I see more positives than negatives in the deals that is going on in the market.
All right, Aman, we would have liked to speak a little more about business and the companies that you like as well, but unfortunately running out of time. So we'll take your leave today on that one. But as we take a short break, just keep an eye on a couple of these small caps which are surging. Blue Dart has now moved to the high point of trade. There was a positive report coming in from Motilal Oswal this morning on that counter. Hindware Home, a stock that Aman holds in his portfolio, in the Abacus portfolio too, has surged and is at about 8.5% in terms of gain. So keep an eye out on the broader markets, doing extremely well, even as the frontline indices moderate a tad. We take a short break. On the other side, we, as always, get you a check on what dealing rooms are saying. Nimesh joins us again. Well, the story of the day so far has been the broader markets. They continue to do well, even as the sensex hit a record high and the nifty meandering just below all-time highs. So as always, let's get in Nimesh and he'll give us the perspective of what dealing rooms are talking about. Nimesh.
You know, Mangalam, today the broader markets are outperforming the nifty. The nifty mid-cap index is up 0.5%, but the flows are largely on the large-cap names. That's the feedback as well. While we're not seeing too many reaction in the large-cap stocks, but the flows are quite positive in the index names. That was overall feedback in the morning. Again, today the FI number may look a little large because of the large Shriram Finance block. So that's something to track. But while Shriram Finance and Piramal both are buzzing in trade, overall the NBFC space is doing good. And that's one pocket which is well bid again in today's trade. So that's the overall feedback. I guess the sector which has seen some bit of profit booking is metal names. We saw some excitement towards the China rate cut and policies, but now we are seeing some bit of profit booking as well. So net, while the broader markets are outperforming today, the flow seems to be more towards the large cap names and that to index heavyweights.
Index heavyweights, and it's reflective right now. In fact, both the HDFC Bank and HDFC Limited stocks are doing extremely well at the high point of trade. TCS doing extremely well. Bharti Airtel has moved higher as well, and ONGC too has moved to the high point. Nimesh, individual stocks, what do you have in your list today?
Okay, so in terms of individual names, the first stock on my list today is Indus Tower. Looks like some bit of buying interest seems to be back. I understand some influential HNI investors have turned active buyers in Indus Tower. One of the trigger is maybe you're going to see a fundraising, potential fundraising in Vodafone Idea very soon, and that will be read as very positive for Indus Tower, and hence you're seeing a bit of excitement in that stock. So that's the first one. The second stock is Godavari Power and Ispat. Buzzing off late. This month the stock is up 38%, and now there is a strong buzz that maybe some bit of corporate action is around the corner in Godavari Power and Ispat, and hence a big move in that stock as well. The third stock is IGL. I guess Sonal also highlighted the City Note. There were some announcements as well. There are buy flows at FI desk. The stock is relatively underperformed in the oil and gas basket. So looks like some bit of traction is back. And Citi today has put out a 90-day positive catalyst watch on the stock, and they expect some bit of underperformance to reverse, and hence some bit of action in IGL as well in today's trade. And the last one is Polycab. In a good market, that stock is down 2%. Some bit of selling pressure as well. I believe a large block deal is expected in Polycab very soon, and hence that stock is under pressure today.
Right, Nimesh. Interesting list, and the season of blocks is continuing. Polycab, the last one that Nimesh mentioned, where there is one expected large one. Well, 45 points on the Nifty. We are at 18,863. Mitesh is with us to tell us what to buy or sell today for a reverse trade tomorrow. Mitesh.
I have two buy calls. LIC Housing Finance, BTST with a stop at 402, targets of 416 here. And the other one is Motherson Sumi Systems. BTST here with a stop at about 84 and a target of around 87 can be looked at.
All right, got that. Thanks very much, Mitesh, for the details over there. Well, with that, we will move on to that interesting story that you saw at the bottom of the ticker just a while back. The data is not very promising when it comes to sales for consumer durable companies in the summer, in the months gone by. In fact, this data is suggesting that sales have declined during the course of the summer. Shilpa is here with more of the numbers. Shilpa, so tell us, what is the tally looking like?
Well, a strong start in Feb and March had indicated to consumer durables that it could be a strong summer season, but that does not seem to be the case. What we've given to understand is that the months of especially April and May and a little bit of June, sales have seen a decline, and the biggest culprit here has been unseasonal rains. So now what we are gathering from industry sources is that sales have declined about 25 to 30% in the months of April and May, especially this is for cooling products, and North of India has been the biggest laggard because that's where the most impact of unseasonal rains was. June, however, slowly is likely to see some pickup, but that is because of a low base, because typically June does not see high sales for consumer durables in the cooling category, and because we're seeing a extended summer and a delayed monsoon. And because this season again has been sort of a tepid or a decline after a disappointing festive season, the industry is likely to now cut down production also by about 30 to 40% in June to balance out the unsold inventory. We also spoke to a few specific industry players and companies also. Bizom, for instance, said that for the industry, sales were down about nearly 18% for April and about 12% for May. Vijay Sales has said that it saw that sales were down 25 to 30% year on year in April and about nearly 20% down in May. Blue Star, on the other hand, which is a large player in the AC segment, says the entire summer season will be either flat or you might see a low single-digit growth for the summer season. But June is giving them some decent indications, again, because we're seeing an extended summer. And remember, this comes after the industry had indicated a 20 or even some players said up to a 30% growth they were expecting from the summer season. But clearly that has not happened. And unfortunately, this is a second washout season after the festive season in October to December also didn't live up to expectations. Back to you.
Climate change is here, Shilpa. That's what one can deduce from this. Mainly because, just a couple of months ago, we were talking to these very companies. It was extremely hot in the country, and everyone was expecting that this summer season will be a bumper one because, one, it comes on 2 years of peak summer sales. And this time around, the weather was extremely hot until unseasonal rains went and spoiled that party as well. We have Mayuresh Joshi joining in as well on the show. Mayuresh, always a pleasure speaking with you. What are your thoughts on all of these consumer durables? I mean, the fact that this was a bit of a washout summer, and this afternoon we had a story coming in from Nisha as well saying that there could be some sort of, M&A activity, at least in the LED space. How do you play the consumer durables theme, and which pockets would you like?
Absolutely right. I think the expectations mismatch is clearly getting played out because a large part of the thought process was that demand will be very, very robust looking at the heat wave across the country, but unseasonal rains have probably spoiled that. And therefore, the dampening effect that you're probably seeing in consumer durable growth, both from a macro data point of view and also from a reported company point of view, is probably going to get reflected in Q1 numbers as well. So I think it's going to be very slow recovery, at least for this financial year. Most players within this spaces itself, if I have to divide this into air condition makers, the other consumer durables like refrigerators, and again, I think the LED players that you're rightly pointing out. I think what has probably happened is even input costs have started coming off. So there has been an element that demand going up, some price cuts initiated, and therefore I think that will have a play in terms of even the margin profile for a lot of these companies as well. How demand will sustain in the second half, specifically looking at how the El Nino effect plays out, specifically in terms of rural discretionary and semi-urban discretionary spending, is one aspect to be watched out for. And therefore, I think the first half becomes extremely critical from a numbers perspective. Having said that, a few changes that are probably coming through. Nitin Gadkari has just mentioned AC cabins coming in for commercial vehicles from FY25 onwards. So again, I think there might be some near-term, short-term pain for a few of these air conditioning manufacturers. Blue Star, as an example, probably stays above key pivot levels on the O'Neill lens. Market share of around 13.5% in unitary cooling solutions. The EMPS, which is the engineering and project management services, expected to do well. Specifically looking at how the series segment might be poised in FY25 onwards, expecting to do around 1 million in terms of sales in the next couple of years. And therefore, I think if I have to pick and choose, I think if somebody is holding on to Blue Star, he or she may continue.
Mayuresh, what are you focused on in terms of a stock or two, really? Something new which your team is working on, you guys like?
Afternoon, Prashant. Yes, I think we're liking the auto ang space and some names from the capital goods stroke manufacturing space as well. So within auto angs, Rolex rings is something that we are liking at O'Neill. Two things. On an annualized basis, there has been a reasonable performance as far as the top line is concerned. Obviously, there were some one-offs from an accounting perspective as far as the EBITDA margins are concerned. But the management is pretty hopeful of maintaining margins about 23%. So I think anywhere between 23 and 24% as a band. Absolutely negligible debt onto its books. And the expectations in terms of the EV portfolio expected to ramp up with bearings expected to be around, with exports expected to be around 60-odd%. Expectation is that they will continue doing well on the top line growth. ROEs are also very good at this juncture, and therefore I think it fits most of the canceling parameters that we need. So I think Rolex rings is one stock that we like from the auto space. Within the cap goods stroke manufacturing space, tube investments is something that we continue to like. Engineering division volumes expected to remain strong. Mobility division is expected to continue performing well and contributing well, both in terms of top line as well as the EBIT performance as well. When it comes to the EV portfolio specifically, where the entire market is probably focused on, the three-wheeler EV has been well received in South India. They're expecting the EHCV segment.
Oh, I think we've just lost that audio with Mayuresh. Okay, we'll fix that and we'll come back. We do have to take a break in any case. As we take the break, we leave you with some more inputs. Here are some more yoga poses you can perhaps consider even when you're at work to keep yourself fit. And of course, we are all celebrating International Yoga Day here.
Hours at your desk can make your lower body muscles very, very stiff. Today, YouTuber Yogini Rashmi Ramesh is sharing some postures, some exercises that will help you lengthen your lower body muscles and stretch them out.
Yes, the first one we're going to do, seated on a chair again, is a hamstring swipe. So you come to the edge of your chair and you straighten one leg out, so your heel is on the floor. You're going to lean forward and try to just swipe your arm under your feet and then come back down. So we'll do the same thing, and this is nice to repeat a few times.
Yeah.
So you stretch your leg, slowly get your hands around, come back up, stretch, and come back up. So while
this is exactly what I do while while I'm just about to begin my run.
Yeah.
That's something that I do on the road, and it's very easy to execute and easy to execute on the chair as well.
Yeah, very easy. The next one we'll do is a glute stretch. Yeah. So you keep your ankle on your knee. So again, you can be seated on the edge of your chair. One hand on your knee, one hand on your ankle, and we're going to slowly bend forward. So as you exhale, start to bend forward. This is like doing the pigeon pose but on a chair, and keep going as low as you can go. The lower you go, the more stretch you'll feel on your glute.
Yeah, my glutes are talking to me.
And then you come back up, and of course remember to do it on the other side. So you place your other ankle on your knee, one hand on your knee, one hand on your ankle, bend forward, stretch, and then slowly as you inhale, come back up.
Wow, that was a very nice stretch to my lower body muscles, my glutes, my hamstrings. Thank you so much for sharing these.
My pleasure.
Well, the Nifty is, I think, all set to retire for the day pretty soon. 18,852 thereabouts. It's gotten kind of comfortable there. It's not looking like it's in a mood to challenge that now the last 15 minutes. Mayuresh is, of course, still with us. Hi, Mayuresh. I've been listening to you. Good to have you on the show as always. Let's get your thoughts on the deal of the day, specifically on a stock like Piramal Enterprises. Nimesh was just explaining to us, obviously, they're getting close to 5,000 crores with this block trade today. The stock is at a deep discount if you compare it to peers in the NBFC universe. Would you take a more meaningful look, I mean, from an investment perspective at all, beyond the headlines today?
So I think it has done what it has done, Surabhi. Good to be on your show as always. Two things. One, I think the wholesale book winding down has been a very, very serious attempt by Piramal over the last few quarters. Retail as a percentage of AUM is now almost 50-odd%, and the overall AUM growth is expected to be in mid-teens over the next few quarters. Obviously, when it comes to asset quality, specifically stage 3, it's around 3.8% with net NPAs around 1.9. Provisioning coverage definitely needs a ramp up. So I think what they do with the sale proceeds from the Shriram sale is going to be extremely pertinent from a balance sheet perspective. Having said that, I think the entire journey that one was expecting in terms of the cleanup, what really happens in the next few quarters, I think is going to be very, very interesting, and a huge amount of re-rating triggers for the stock itself. So I think we'll not jump in right now. I think the EPS rating is relatively okayish on the UV lens, and therefore I think Q1 numbers is ideally what we watch out for. I think a large part of the price action has probably happened with the trade and the kind of money that is expected to flow on Piramal's balance sheet. But I think numbers will be something that will do the talking and the re-rating. So Q1 extremely critical for the stock.
Mayuresh, you were telling us about your stocks you like. You said Rolex Rings, Tube Investments, and was there a third? Or those were the two? Mayuresh, can you hear me?
Yes, Prashant.
Sorry, I was saying you mentioned Tube Investments, Rolex Rings. I was just checking, was there a third before you were cut off, or these were the two names?
No, there are plenty more. I think we also like KFIN, which is obviously a proxy in terms of the entire Indian equity markets. Our own sense is that the stock is extremely well poised in terms of garnering share, both in terms of the existing market share, as well as expectations in terms of issued solutions as well. A large part in terms of the portfolios that they're managing and the expectations in terms of more demat accounts getting incrementally added every month. I think it becomes a perfect proxy to the entire India growth story. So I think KFIN is also something that we continue liking.
Right. Final question, Mayuresh, a couple of stocks doing extremely well. Saregama is one of them, up 9% in the broader markets, and Happiest Mind doing well as well. Have you tracked Saregama, by the way? I mean, they hold a lot of IP. I was just looking at their website. 1 out of 2 songs recorded in India in the music industry is actually, owned by them in terms of rights. Do you think them looking to unlock value in this in any form could be of some value to investors here?
Oh, absolutely, can be a huge possibility, because the kind of database that they've got and the copyrights that they're probably possessing, Mangalam, at this point of time, they can become a huge play once every record probably starts getting digitalized or used in some form or the other. So I think on the core business module itself, I think because of the database that it itself possessing, can be a huge revenue driver going forward. But the other segments that they're also probably getting into, I think, is something that needs to be seen and observed. And therefore, yes, I think the momentum probably continues on to this stock. But as I said, not onto our core portfolios at this stage.
By the way, Mazgaon Dock is selling off today. That's been, again, it's been such a large mover. It's down about 7%. I don't think there's any news flow or anything. Any views, Mayuresh, here? Mazgaon?
No, I mean, look at the move, Prashant. I think it's a move 60-odd%, if I'm not mistaken, in the matter of a few days. So I think some shakeout, some profit booking is what I perceive. Nothing specific that I know.
All right, Mayuresh, thank you so much for joining in and giving us your perspective on a bunch of stocks and giving us some new stocks as well. So we will keep our conversation going on this platform and the others as well. Thank you so much for joining in. And with that, it's time for us to wrap today's trading session so far. It's been a good session. I mean, give and take everything. We went very close, perilously close to a record high on the Nifty. The Sensex, the grand gold index, after 137 sessions, went ahead and hit a fresh record high in the first hour of trade itself. The mid-caps were really the star of the show. We had almost 0.8% gains coming in for the mid-cap index, which is nearly 3 times the gains that we saw in the frontline index. The Nifty Bank was a bit of an underperformer, and it's the Nifty Bank's underperformance that actually, took the Nifty away from going ahead and hitting a fresh record high. The Nifty Bank continues to face some resistance technically at the 20-day moving average. In terms of stocks that gained today, the index was powered by 2 stocks. It was HDFC Limited and HDFC Bank, which kept the Nifty Bank afloat. X of that, the Nifty Bank would have perhaps been in the red. Power Grid was a good gainer. ONGC was also among the top gainers. Tech Mahindra, TCS, large cap IT was well bid for another trading session today. Among the stocks that did not do too well, we saw some profit taking come by for JSW Steel, Hindalco. Autos actually were on the downside today as well. So we saw M&M being at the low point of trade. Perhaps the delay in monsoons hurting some of these players. ITC too was ended at the low point of trade. In the broader markets, it was just 2 stocks that took everyone's breath away right from the word go. It was Piramal Enterprises and Shriram Finance on account of the large trade that took place. And we had Lupin as well, ending about 5.5% higher as the company has gotten approval to sell generics. Periva, Prashant.
Mangalam, market breadth worsened a little bit in the last hour or so of trade. So I'll just, but I have to say there's a long list of huge volume-led gainers once again. I'll get to that in a bit, but look at some of the names on the downside. Mazgaon, I was just pointing out, if we can just have these stocks up. Aptus, there was a large block deal right at the word go. That sold off. Along with that, another small home finance company, Home First. There's Mazgaon, Aptus, and then Home First. Home First also came under pressure. Gokuldas, which had climbed above 500, that saw a little bit of a pullback. Titagarh Wagons was down. These are all some of the large volume-led losses. Losses themselves are not very large, at least on these, but they pulled off. Polycab, of course, was also lower. Nimish said that there is perhaps a block deal which is awaited. Now to the gainers, right? I mean, there was, of course, Shriram and Piramal Enterprises, but there's just Lupin Mangalam mentioned, but there are so many others. Look at Max Financial Services, that is MFSL. Look at JSW Energy, which rallied hard. Happiest Minds, a very large gain today. Subros lost from the day's high, but ends higher once again. Look at GMDC. Mayuresh was talking about Tube Investments. That will come up on your screen. Big gainer today. Blue Dart was another one which looked very good. Nazara Technologies was up, I think, 5 or 6%. That will come up. Schneider perhaps is another one. Linde India. And these have got decent-sized volumes, by the way. KPI Green has been, on a one-way march upwards, and that continues today as well. La Opala, Hindware, Satin Credit Care was a big mover. Muthoot Capital. By the way, Muthoot Finance is also back above 1200, so more respectable kind of levels coming through. So, market breadth, yes, numerically declines outnumbered advances, but the momentum was with bulls and what went up, and the absolutely crazy action in mid caps and small caps that continues with all the names that I just mentioned. On the Nifty is 40 points. It's a very respectable close, 18,858. It's a wrap on this edition of Closing Bell. From Surabhi, Mangalam, me, everyone on the team, thanks very much for watching. Don't go anywhere. We'll put the spotlight on India's EdTech landscape on our Wednesday special, Mad About Markets, coming up in just a bit.